What surprised you the most in 2025? And my response to that has been the price action in precious metals in December.
The extent of the rally has proved a surprise to most.
And I think even the most bullish market participants were still a little bit surprised to the extent and the speed at which prices rallied in the past month or so.
Both precious metals have been breaking records for a while now, triggered by macro factors.
The momentum remains strong.
What is UBS's recommended strategic allocation to gold?
5% is a good level as a diversification into gold.
To learn more about the gold and silver investment market, I sat down with Joni Teves, Precious Metals Strategist at UBS. Ms. Teves, thanks for joining ShanghaiEye.
Thank you.
Given the recent surge in both silver and gold prices, what do you see as the primary driver in this current rally? Is it more about geopolitical safe haven demand, the monetary policy outlook, or the physical market fundamentals?
The rally has been, in general, a combination of several factors. For gold, it's really been more about diversification that has been driving prices over the past year or so. And I think that has spilled over into silver and other precious metals. This need for investors to diversify their portfolios and especially to diversify into hard assets. The most recent run-up in prices as well, we think, reflects an increase in investor activity. And I think that has helped kind of accelerate the move, especially during the period towards the end of last year where liquidity tends to be a lot thinner during the year-end holiday period. There has been an element of physical liquidity conditions also kind of having an impact on prices, and we saw that in gold at the beginning of last year. We saw that a little bit in silver in the fourth quarter. This is something that could continue to be a theme into 2026. So in addition to gold and as an extension silver being driven by macro factors and what's happening in the macro landscape, we think that investors should continue to be quite mindful that at the end of the day, gold and silver are also physical commodities. So we need to keep in mind these liquidity issues as well.
How's UBS modeling the path for the US real interest rates and the dollar? And what is your base case gold price target for the next 6 to 12 months?
We're still expecting a couple of rate cuts this year, and that should ultimately be supportive for gold prices. Despite the fact that gold's correlation with real rates has been a lot more unstable in recent years, we still think that it matters for gold's ultimate path, because at the end of the day, real rates represent the opportunity cost of having that position in gold. Our view on the dollar is a little bit less straightforward as far as gold is concerned, because we're not necessarily bearish on the dollar this year, but we think that gold's appeal is beyond just the dollar, right? We think gold is currently being viewed as an alternative to fiat currencies more generally, especially with growing concerns about fiscal and debt sustainability across many different economies. So from that perspective, we think even if the dollar strengthens, gold can also continue to strengthen. And we think that the gains in gold will be a little bit more focused on the first half of this year. So for gold and by extension silver, our base view is that it will be a year of two halves. The first half of the year or so, we continue to see the market making new record highs. Towards the end of the year, so the second half of the year is when we start to see the bull cycle in gold maturing as the Fed nears the end of its easing cycle. We think this will also coincide with the bull cycle in gold also nearing its end. So we think that prices will taper off in the second half. In the first 2 quarters of the year, we have 47.50 as a target. We're very close to those levels now. That's basically an average that we expect. So that implies that the market could test the 5,000 level, particularly if concerns around Fed independence start to gain more momentum. And towards the end of the year, we have a year-end target of 4,500. So we think that the market will start to taper down.
From a portfolio strategy perspective, what is UBS's recommended strategic allocation to gold for institutional and private wealth clients in this environment?
We've also looked into this in the past, where we look at typical portfolios performance over different economic regimes over a very long period of time. And what we find is that on average, 5% allocation to gold makes sense across the different economic regimes. So that does mean that because it's an average, it means that during a recession you hold more than 5% potentially, and during kind of periods of expansion you hold less than 5%. So that's the sort of level that has been discussed in the market, but I do think at the end of the day it depends on a case-by-case basis.
How are institutional investors you speak with currently positioning themselves? Are we seeing a shift from passive ETF holdings to more active futures or physical strategies?
Equity investors, equity generalists that are more familiar with expressing views in the equity market, ETFs tend to be a natural way for them to express their positions. For those that are kind of, I guess, have a lower risk tolerance and want to really have gold as protection, they tend to want to hold physical allocated gold. So, official sector tends to hold physical, for instance. Very long-term kind of retail holders that, think about it more from a very long-term investment horizon tend to want to hold physical. And then you have kind of more short-term players probably wanting to do derivatives, either futures or options. So it really depends. I think at the end of the day, from our perspective, in terms of positioning, we think that although the view on gold, the positive view on gold has been very consensus for some time now, we think that positioning is not there yet. So that's why we expect that we can see continued gains in the first half of this year, because we think there's still room for investors to increase their allocations in gold.
With central banks, especially from emerging markets, continuing to be strong buyers, do you see this trend as a permanent structural shift in the gold market?
I can't see them buying gold forever. At some point they will also reach their target allocations in the same way that investors will eventually also reach their target allocations. But our view is that for now, the trend is likely to continue. So our expectation is that the volume of purchases from central banks, sovereign wealth funds, other official institutions will remain at historically high levels. So well above the average that we saw prior to 2022, which was about 400 to 500 tons. They have been buying over 1,000 tons in the previous few years. Last year, as of October, the sector was on track to buy 850 to 900 tons. So that type of slowdown is what we expect to continue in the coming years.
Silver has significantly outperformed gold recently. To what extent do you attribute this to its industrial demand profile versus a pure speculative catch-up play?
The performance of silver, particularly in the second half of the year, we think has really been driven by kind of investor activity increasing and investor interest increasing in silver, partly because of kind of relative value plays, silver kind of not really keeping pace with the rally in gold. Also silver, even as it outperforms gold, it still is at a much lower price point, so it's much more accessible for many investors from that perspective. So we think that it's really investor flows that tend to drive silver prices rather than the supply and demand fundamentals. We do think that supply and demand outlook helps, because the fact that we are expecting to see continued deficits in the market does also help investor sentiment. So it feeds into the decision for investors to take positions in silver.
With volatility picking up, what are the key downside risks you're monitoring that could trigger substantial correction in precious metals?
For gold, the key downside risk that we see is really if there is an acceleration in growth, especially out of the US. Potentially, if we start to see AI productivity gains and that drives growth, then it puts the Fed at a position where if inflation remains high, growth is strong, they can tighten policy, and in that scenario where the expectation shifts towards rising real rates, then that changes the whole narrative for gold. So in our view, that's the biggest downside risk for the bullish outlook. Another potential source of downside would be if there is a sharp correction in equities, and this leads to investors needing to find liquidity. So gold in that sense will act as a source of liquidity. But if that's the case, I think it will be a buy the dip opportunity, because I can see that, gold typically does well in the aftermath of that sort of dynamic. And then finally, another potential downside risk would be if central bank and official sector purchases are a lot lower than expected. And by a lot lower, I mean that it's well below even the average that they were buying prior to 2022. Not because that in itself is negative for gold, but I think it will make a lot of investors nervous, because the official sector buying has been such an important part of the narrative for gold. For silver, in the very near term, I think any announcement regarding the Section 232 investigations, if it's a case where there's confirmation that tariffs will not be applied to silver, that could create some near-term headwinds. And given that silver doesn't have the official sector buying that gold has, it means that it doesn't have as much support. So that does mean that the pullback in silver could be much deeper than what we've seen in gold. So that's something that I would be more cautious of. I think silver in general has been, or tends to be, much more volatile than gold. In particular this year, I think especially with the increased investor activity and increased short-term investor activity, I think market participants need to be mindful of even greater volatility in silver.
Looking ahead to 2026, what is the most under-discussed trend or data point that you believe could be critically important?
Ideally, the market takes a bit of a breather here, because it has already done quite a lot. Even I think market participants that are bullish and want to be long are very nervous being long at these levels and probably want to wait. Having said that, in the last 2 years, that has been part of the reason why these rallies have been quite strong, because everyone wants to wait for the pullback. The pullback doesn't come, and everybody jumps in at the same time. I think we are towards the end of the bull cycle in gold, and therefore silver as well, we expect will follow the path of gold. I don't think there's a hard and fast rule as to how long bull cycles in gold happen. We've seen the bull cycle in the early 2000s, let's say that ended in 2012, 2013. That was a very long cycle. But then we also saw the COVID pandemic cycle, which was very, very short. And now I think the bull run in gold has been going on for 3-4 years. Investors who want an allocation to gold have been trying to build that allocation also for some time now. At some point, we expect that it will become harder and harder to find that marginal buyer as investors reach those target allocations. And the fact that we think prices will continue to rally over the next few months also helps investors get to those levels, right? Because they don't have to buy so much in volume terms, because the price is also rising. So as a percentage of their total assets, the value of gold is rising along with the price.
Ms. Teves, thanks for your time.
Thank you.